In this video, we're primarily going to talk about the new weekly options that have come out on MMAT. I will also touch on the filings that came out, the Schedule 14A, and of course, we're going to talk about the conversion of shares that we did happen to see, as well as at the very end of the video, I will touch on MMTLP and the short interest in the price action that we have had seen this week. So, with that being said, make sure that you like the video for the algorithm, subscribe if you find value in my channel, and of course, give me a nice little comment down below, even if it's just a smiley face or whatever it may be, just to help that YouTube algorithm better recognize my videos and get them out there. So, enjoy.
What's up, YouTube? My name is Uncle Smokey, and this is Uncle Smokey Stock Trades. And before I start this video, I would like to say, I am not a financial advisor, and this is not financial advice. So please take what I say with a grain of salt, and do your own DD.
All right, so on Thursday this week, we saw a development happen in the options chain. We have been given weekly options. Now, I put out a tweet immediately after this did happen, and I said, I don't really think that this is a good thing, and I stand behind that. As a matter of fact, I'm going to break down what I think. This is, of course, in my own opinion, what I think that this is all about. But in order to be able to do that, we need to understand a little bit about this whole options thing. What's going on? Why, what, when, where, how? So let's go ahead and just get cracking right into that first. First and foremost, let's take a look. You've got November 4th, November the 11th, November 18th, which you'll notice that does not have a weekly next to it because that is the monthly options contracts. November the 25th, December the 2nd, December the 9th, and again December the 16th, which does not have a weeklies after that because it is a monthly's contract expiration. The third Friday in every single month is going to be options expiration for your monthly. So you won't have weeklies there. It's just monthlies. And then, of course, you've got your 4 witching days a year, which creates volatility and blah, blah, blah. It's not that important right now. What we need to concentrate on is why do we have weeklies and where do they come from, why, when, where, and how, okay? So first and foremost, options are given to you by the OCC. As a matter of fact, we can go over here to the good old internet. I have that all pulled up for us. All right, so here it is. The OCC, Options Clearing Corporation, is an organization that acts as both the issuer and grantor for options and future contracts. Pay attention, the issuer and grantor for options and futures contracts. The largest equity derivatives clearing corporation in the world. It operates under the jurisdiction of the Commodities Futures Trading Commission, the CFTC, and the U.S. Securities and Exchange Commission, or the SEC. Probably the most crooked of all of the freaking branches that we have to deal with as far as it goes. The OCC should not be confused with the U.S. Treasury's office. Don't worry about that. Not a big deal. So what do they do? What are they? So, like I just said, they're the grantor. This is the only people who can issue an option. That is, they are responsible for issuing options. They're responsible for standardizing contracts and guaranteeing their performance. This means that a transaction will occur if an exercise occurs, no matter what. So, in other words, if you exercise your contract, the OCC is the one who is going to guarantee you those 100 shares that you just requested. It is not going to be the broker. It's not going to be the person who wrote it. It is the OCC. They guarantee that you will get those shares, even if the person who wrote the contract does not have them. That's what's important to remember. So if they do not have those shares, so say they're writing naked calls, which means they are taking synthetic shares they don't have, and they're writing a call saying, here, I don't think this is going to go up. I don't think that I'm going to lose any money. So I'm going to just write you this call, and you can buy it. I'm going to collect the premium from it, and when it doesn't go anywhere, you're going to lose all your money. I keep all that premium, right? So the issuer, if they do that, if you were to exercise that contract, you would still get your shares no matter what. Now, it is then upon the OCC acting as the clearinghouse, to go after that person, to go to the broker who allowed that person to write that contract, and collect their monies, collect their shares, whatever it may be. It kind of goes into a failure to deliver. And that is another form of naked shorting, okay? Is writing a naked call. So keep that in mind, that the OCC, they're in control of it. They're the ones who make sure that happens, and that means that if you were to have an options contract in order to exercise it, no matter what, you're going to get shares. And remember, the one crucial thing about being a retail investor is it doesn't matter how many shares you have or whatever. What matters is that you hold them. They can be synthetic. They can be naked. You'll never know. You'll never, ever, ever know whether they are or are not real shares. What matters is that you hold them. If you hold them, nobody can take them from you, and they're as good as gold. They're as good as real, okay? Because retail will always come first when it comes down to that. When it comes down to holding a physical share, retail has it, because our proof is in the pudding. We physically have to buy these shares as retail investors. If we're long on a stock, we can't just make it up. We have to buy them. So keep that in mind. Next, we're going to talk about when. The OCC is, again, the people who actually issue the options. They're the ones who physically start the options trading and say, okay, you can do it. That means they decide who does monthly and who does weekly. And we, I guess, just struck weekly. And we don't know why. And I'm going to get to that here in a minute. But they always release them after hours on Thursdays. And it's always for the next 6 weeks in advance. So this Thursday, they gave us a full 6 weeks. Next Thursday, you'll notice that they're only going to add 1 week. They'll add the last week of December. That weekly will come in, and then the following week, this week will drop off, and then the next week will come on, which will be the first week of January, and it'll continue to roll on like that, because that's how they do it. They give you 6 rolling weeks in the weekly, because after that, then you're considered, I guess it's not really a leap, but it's still a long contract. Leaps are like 6 months out. Anyway, anywho, so once you've done that, now you have to talk about the CBOE. Who is the CBOE, right? So now we know when that happens. We know who controls the actual guaranteeing of the shares and who actually makes the market. What is the CBOE? The Chicago Board of Options Exchange. This is the exchange that actually is the broker to the brokers. Okay, this is the broker to the brokers. They will be the reporter to the clearinghouse, the reporter to the OCC. All right, so Thinkorswim, TOS, allowed me to write a contract for McDonald's. And that contract, I put it out for $50. And McDonald's spiked up to $100 that day. And whoever bought that contract for me at $50 strike, now exercised. I'm now responsible for, I'm on the hook for those 100 shares that they exercise to, because a contract is ultimately the right, not the obligation, to own 100 shares in the near future in the instance you decide to exercise that contract. So if I don't have those 100 shares, say I wrote that call naked, or I say I only have fractional, I have a fractional amount, I have 50, okay, because I was delta hedging instead. So say I have 50 shares. The broker that allowed for me to write that will then be penalized from the CBOE for allowing that to happen. Hey, you need to make sure that these shares come back. That broker will then penalize me. Okay, they'll say, now your margin has just been ripped, right? So now you just did this on margin. Now, you can't normally do that unless you have a lot of liquidity. You need to have a very liquid account, which means it's not for the average retail investor to be able to do these things. Average retail investors can't write naked calls, basically what I'm getting at. Anyway, so with the liquidity issue, that means it's going to be big names, big hedge funds, big whales and things like that can write contracts. They can write naked contracts. They have liquidity to do so. All right. So it's important to know that the OCC is the one who allows it. The CBOE is the one who basically reports to them, and then the brokers report to the CBOE. Yeah, I hope I didn't go too confusing on that. I hope I didn't go, woof. Anyway. Okay, so I covered all of that. That was important. So now we know the who, we know the when it happens, and we know the, well, we don't know the why yet. Well, let's go into that now. MMTLP, I think, is the why. I think that is the why. Let's go hop on over to the options chain. We're going to take a look at this on Thinkorswim because it's a little bit better of an options chain readout. So one thing I want you guys to notice is that there's only 4 strikes. That's it. 4 strikes across the board until you get into November. Then there's 2 strikes. 2. It doesn't allow you to go over $2. That to me is kind of interesting. I am still digging into this whole theory, but this is just a theory, so please keep this in mind. This is my theory, my opinion, why I think this is happening. However, this has happened in previous tickers, BBIG being one of them. And probably the most recent for knowing this. You know it, guys. Not a sponsor yet. So, what I think this is doing is this is allowing the hedge funds to try and cover their short positions through the options chain, and also allowing for them to crush the price down, do an options crush on a weekly basis. There was absolutely no reason why the weekly contracts even became tradable. None whatsoever. There has been no major volatility in the options chain. There has been a pretty good increase as far as it goes overall volume in the past with MMAT due to the coattail trading off of MMTLP. But it hasn't been significant enough to be able to warrant weekly trading. The only reason why I can foresee weekly contracts coming out, and this is the why, is because a market maker, a hedge fund, decided, hey, we're going to need a way to be able to suppress this. This is a heavily shorted stock. If you're new to the company, if you're new to any of this, go back in time, watch some videos. There's a lot of DD out there, but we are heavily shorted, even though it only looks like there's about 10% overall short interest. You need to think about how many shares are actually held inside, how many are held institutionally, and how many are held by investors from the direct placement that was happened. It was a direct placement, direct private placement offering that happened a couple months back. Those people hold a whole lot of shares too, right around 37 million-ish. And I don't think we've seen a lot of selling off on that because we haven't seen the turnover over the course of the last couple of months to assume that. We've only seen small amounts of turnover, and it's nowhere near the volume of shares that it would have been to consider any of these people have sold off any of their direct placement shares. So I don't think that's happened either. What I do think they're trying to do is they're trying to hedge their short positions in the options chain. I think this is a tool being used by the market makers, by the short hedge funds, by the people who have really screwed us over as far as it goes with MMAT. I think they are trying to be able to make it so that they can not only cover what they've already done, but continue to short and continue to manipulate the stock through the options chain. And here's how they can do it. Now, as we know, we've had the monthlies up there for a while, but there's never been any serious volume, any serious volatility inside the options chain. But with the weeklies coming up, they can basically create volatility, fake volatility in the options chain because it's a shorter amount of time. You've got delta on your side, gamma, which is what measures the overall rate of delta, and then you've got theta. Now, theta is time decay. Theta is what actually crushes the stock price. But with high delta, you can keep the intrinsic value up even though theta is on the decline. So, anyway, how do they do it? What's going on? Well, with a short position, you're ultimately selling a stock that you don't have. If you buy a call, say at the $1 strike, and this thing goes to, $3, now you can exercise that call of the $1 strike and get those 100 shares for $1. $1 each individual share, okay? So when you do that, you have now secured 100 shares. Again, that allows them the ability to be able to cover because they bought the option, they exercised the option, and now they legitimately hold 100 shares no matter what. Even if those shares don't really exist, even if they're synthetic shares. Because they could have very well wrote that call option to themselves. They could have wrote a naked call position, not even having them, and then exercise said call position, okay, and got those shares. Now they can now wash their call position because they sold it to themselves, right? They sold them their own naked shares. No one's going to report that. And they now have synthetic shares to cover their short position. What does that do? That artificially inflates the float. It makes it fake. And that also crushes the stock price. Every time a call option gets exercised and there's no shares to go around, or it was a naked call that was written, it artificially inflates the float and artificially deflates the price of the stock. So that's the one thing you always have to remember. Again, that is how they can now manipulate the options chain to help cover their short position. Now, there's other ways they can do that. There's a lot of different types of hedging that can be done through the options chain, and that's honestly for a whole nother video. I think this is probably the most important thing we need to take out of this, is the fact that I firmly believe that is why that they've done this, the ability to be able to slip in and out of short positions. That means now, even if they don't cover old positions, right? Say they know they're beat down, they know they've got these out there, what they could do now is they can continue to short from here, and then just keep exercising calls. Keep exercising calls. Short and exercise, short and exercise. Ultimately, it never lifts the short interest. It keeps the stock price below that $1 and $2 level they want it at, right? And it allows for them to be able to make maximum dollars. So number one, it mitigates the risk. Even in the event of a price run up. So say this thing just starts going crazy, right? Instead of them having that unlimited loss that they're looking at being a short position, now they've mitigated it having calls, long calls. And those calls, again, they're just going to exercise them. So anyway, that's where I wanted to go with that. I don't think this is a good thing. I definitely think this was designed by the market makers, by the hedge funds, to help them be able to further their destruction, and ultimately screw the retail investors, being able to try and get out of this scot-free and clean and with no repercussions. Ultimately, what I think we can do to help prevent this is, number one, if you're going to play in the options chain, if you're going to try and exercise calls and stuff like that. Again, I'm not a financial advisor. This is never financial advice. I always say never exercise calls, but in this instance, it kind of benefits the retail investor. If you were to do that, you were to exercise your calls that you have at the $1 strike, the 50-cent strike, whatever it is, you're buying them at that price, right? You're buying those shares at 50 cents. If you do that, then you're, number one, getting them way cheaper than you could have on the open market, but you're also helping bring those synthetic shares home. And at the same exact time, it basically screws the hedgies and the market makers, the people who wrote those naked calls, because now they weren't able to exercise those calls. They weren't able to wash their hands of those because the retail investor got them. We got those shares instead of them. So that's the only way, really, I think you can combat it. Otherwise, my personal opinion, and I think this would be the opinion of a few others, the only other way you can really combat this is to try and not give them the volume inside the options chain. If you don't feed into it, they can't really capitalize on it, because the only way that the options chain is even beneficial to anybody is with volume or increasing stock price. Those are the only ways that the options chain can actually be really beneficial. And it just basically strengthens the retail investor as a whole as it goes, because we know we're going to hold those shares. And we already know that no matter what, if it's synthetic share, naked share, whatever it may be, to us, it's real. It's 100% real. And they have to try and buy that back from us. And they have to do that at our price, at what we want for it, not for what they want for it, not what they paid for it, what we want for it, because we control that share now. That's ours. That's our share. You know, we take our damn ape hands, we hold that thing diamond tight, and we say no, right? So anyway, that's where I'm at with that, and I think that's what I've got on of that information. With that being said, I want to move on to a couple other little things that we need to talk about. And first, we're going to talk about the Schedule 14A that came out. What is the Schedule 14A? This was released because on December the 5th, we're going to have our annual shareholders meeting. This is where we all make our votes. What are we voting on, Smoke? Well, not much, to be honest. That's where the Def 14A came out the second time through, basically giving you what you're going to be voting on. And it's right down here. So the first voting matter you're going to be voting on will be, of course, your election of the directors. Directors John R. Harding, George Palikaris, Maurice Gutierrez, Alice Christelaw, Steen Karsbo, Eric M. Leslie, and Ken Hanna as your directors. Of course, the board recommends this to be 4. I will, of course, be voting for. There's no reason not to. They're running a tight ship over there. They're doing a good job. The second thing that we are going to be voting on would be to ratify the selection of KPMG LLP as our independent registered public accountant firm for the fiscal year ending December 31st, 2022. Of course, the board recommends for. I am, of course, going to be voting for. There's no reason to change that. They're not doing anything wrong, nothing bad, whatever. And the third thing we are going to be voting on would be to approve a non-binding advisor on a non-binding advisory basis the compensation of our named executive officers as presented in the proxy statement. Basically, they're just saying, hey, we want to go ahead and give our lead officers their compensation. Do you think they've done a good job? Vote for, yes or no, and then they get their compensation, blah, blah, blah. Of course, the board will always request for you to vote for on all of these. Most of the time, they don't tell you to vote against. It's just, why would you want to vote against the board? The board's putting it on there for a reason. But if it does, you kind of want to pay attention, read into it, why. No one is forcing you guys to vote this way. This is just what they suggest. Of course, you can vote any way you want. That's how votes work. Yeah. That's what that was all about. Nothing that we need to worry about in the now. Just remember, get ready to cast your votes if you want to vote. And there's nothing major really to vote on. I'm just saying all four. The other thing I want to talk about, the Form 4 that came out, Thomas Gordon Welch. He is one of our largest angel investors. Between him and his wife, they hold right around 40 million shares of MMAX. That is the MMAT equivalent on the Canadian exchange. And they have been slowly and gradually converting them over. Why? Why, Smokey? Why would they do that? Well, they have been converting slowly, I think, to help represent the float better, to kind of help bring the light to the people. Noticing they're doing it in small chunks to help bring light to the people. Hey, we're here. We're going to start moving things over. We're doing it in small amounts. There could be tax implications, things like that. One thing I want to talk about on the tax thing. You'll notice last year, as a matter of fact, we just go ahead and... All right, yeah. So if you look in here, you're going to notice that there was a lot of buying, selling, things like that. It wasn't buying. There was some switching and some selling. And this was for tax purposes. They did some stuff also for charity. They gave some to charity. Again, tax purposes. So I think that they've actually been covering their tax liabilities with some of the exchangeable shares. I do think they've done some of that already, and I think they're going to do that again as well, cover some of their tax liabilities with some of these exchangeable shares. They'll switch them over and they'll sell them off, just so that way they can continue moving forward. I don't think that there's too much of a tax risk on them. They're willing to go. They don't really care too much as far as I'm concerned. Thomas Gordon Welch and Anna Lambert have been our primary angel investors, and they are very bullish on the company, and I don't think they're going anywhere, guys. So when people are saying, hey, they're switching them over because they want to sell or whatever it may be because of the run-up that may happen, sure, that could happen. Sure. Do they deserve to? Absolutely. They've been holding on for 13 to 15 years. So yeah, I could foresee them wanting to sell off some shares in the event of a run-up, but I don't think they're going to dump off their entire freaking portfolio. They're going to make a little bit of their money back. First and foremost, they're not at a loss as of right now either. So just keep that in mind. So yeah, they are our big ones. When they do the big conversion, that's when you're going to see a true representation of the float. The big common misconception that I'm hearing is that they're selling shares and buying shares. That's not what's happening. This is an exchange. Okay. You will not see, price action when they make these exchanges. You won't see it at all. It's most literally taking it off this one, putting it on this one, and it's done. Okay, so don't expect to see big momentous movements because of it. That's going to be coming from the open market exchanges, not through an exchange of MMAX to the MMAT ticker. Only thing this does is this just realizes the true free float, the real insider ownership. We don't see that right now. As a matter of fact, if we go on over here to Ortex, what you're going to notice is right down here, you're seeing shares outstanding and the free float shares. As of right now, it shows that 89.42% of the overall shares are a part of the free float. First off, Ortex is wrong right there without any of the MMAX stuff switched over. And Fintel is wrong as well. A lot of them are because they're not actually factoring in all of the true numbers. But I will tell you this, as far as it goes with MMAX, there's about 75 roughly million shares held by 3 people. You've got George, you've got Thomas Gordon Welsh, and Anna Lambert. Those 3 people hold the vast majority of the overall MMAX shares. And when they do finally make the conversion, like I said, you're not going to see a spike in price. What you will see is a drop in overall free float. And again, I think this is wrong already, just off the top. I think with the current holdings that you're seeing, with any of the filings you add up, you're right around that 20% overall insider ownership. But once the conversion happens, you're going to be looking at closer to that 30 to 40% overall insider ownership with all of the MMAX conversions. So just keep that in mind. One thing that you want to remember is anytime you have a strong insider ownership in a company that's extremely bullish, other investors look to that. The big money investors look to that. They say, oh my goodness, the insiders are extremely bullish on their own company. We're going to be bullish on it as well. And it's an indicator to help them want to invest, to help them make that ultimate decision. Do they want to drop money on MMAT? While we're here at the Ortex, let's go ahead and cover our short information. Let's go to the overview. So as of right now, it's 100% utilization. That means all of the shares that have been available to be lent out, according to this, are lent out. I think there's still actually some available, but, Ortex is never fully right. This is on a delay. Cost to borrow is currently on 10.72%. Days to cover would be 5 overall days to cover. There are currently 31.17 million shares on loan, and that is 9.64% of the free float. There is also about 28 million shares I was right the first time. 31 million and a half shares in short interest, which is right around 9.5 to 10% of the overall free float. You have been seeing a lot of borrowing and returning of shares. However, you're noticing the borrowing is heavier than the returning. They're actually still borrowing more shares than they're returning, and they're shorting more than they are allowing for longs. Now, on the exception of the last 2 days, we did see a slight pullback as far as the shorting goes over the course of the last couple of days. This last week, we've only seen a maximum of 51% overall short volume. Otherwise, it's been in the mid 40s to upper 40s. But still, it just shows that the shorts are still convicted in this. They still want to try and pound this down. They want to keep it below certain numbers. Right now, they're forcing it to stay at that $1 mark. Now, I would love to stay at the dollar mark and keep going higher. But one thing we just talked about earlier is the options, and that is going to be a way that they can keep this short interest from looking so ridiculous is by doing this through the options chain. Short on the ticker, cover on the calls, and then they've basically washed their position. So, is there anything else I want to talk about? Let's see here. Let's scroll through. 70% overall dark pool volume. We've done all the filings, with all that stuff, did that stuff. All right. MMTLP. As of right now, we have no S1 filing or S1A effectiveness. We're still waiting on that. Let's hit refresh. Boom, still not there. And that is the ultimate catalyst. That's what we're waiting for. And I think that's what the hedge funds are waiting for as well. They know it's coming. And when it comes, they're going to see a massive move in MMAT. You won't only see it in MMTLP, you'll see it in MMAT, because the people who are going to be pulling their profits off of MMTLP will be probably dumping a lot of them into MMAT. That's kind of one of the things that we've got going for us. Any of the OGs that are just swing trading MMTLP and holding their OG shares long will be dumping their money into MMAT as they make profits on MMTLP. So keep that in mind. Moving over here to the iBorrow desk. As of right now, it shows that MMTLP only has about 45,000 shares available to be lent from IBKR. And it's got a fee of about 22%. And there was an update on the short interest for MMTLP through the FINRA. As of 10/14, there was really no change in the overall short interest. Now, what's interesting is this covers from 9/30 to 10/14, okay? So if we go to our stock chart, there it is, go over to MMTLP, here you go. 9/30, which is right here, right there, 9/30. This is the daily chart, by the way. All the way to here. This was the massive run-up. Shorts didn't cover. Shorts didn't pull out. Shorts did nothing. On this big, big run-up, they did nothing. We don't see anything past this. We don't know what the short is. This, remember, would be on a T2. This is the day that they show 2. It was right to here. We would not know what this is until this next report comes out. I will be willing to bet that there was a massive increase in short positions on this major dump right here, all the way back down to almost that $2.45 mark. Remember when it caught at that 385 here? This line, there was no coverage up to that point. That massive move to $7.50. And it says it right here. Right here. No coverage at all. Look at that. On 9/30, the short was 6,587,182. On 10/14, it's 6,592,406. If anything, they added a few. They added 5,224 short positions to what they already had racked up. So just keep that in mind. MMTLP has seen absolutely no coverage, and neither has MMAT. We do not have any updates as far as it goes on MMAT. On their short interest as of yet, on numbers that hasn't released. I'd probably see it Monday, Tuesday, I would think, to know if anything has happened with that run up to 135. So that's the next thing we're kind of waiting for, is to see that information that hasn't posted yet. However, what we do have here is the true NOCP, which is the NASDAQ closing price. This is the official NASDAQ official closing price. And this shows that we do have 3 days right there. 102, $1, 102. 3 days closed above $1. That does mean that we are now 7 days away from falling back into compliance. And that's very exciting. I really hope we do see that, of course, this next week and a half. It has to happen in consecutive. We have to see it Monday, Tuesday, Wednesday, Thursday, Friday. And we need to see it again Monday, Tuesday. Before it can dip back below $1, it has to do it 10 consecutive days. It has to be that way. If we don't see that, then it wipes the calendar clean, and we have to start from scratch the next time it goes back above $1. So with that being said, that's all I got for this video. It is extremely long and winded. I appreciate y'all for tuning in. Peace, y'all. Good night. Hope y'all have a great trading week.